From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for April 18th, 2016. In today's video, we're going to be taking a look at the EURUSD, the euro, versus the US dollar. We're going to start all the way out here on the weekly time frame to get a long-term perspective for this currency pair. It's important to look at the larger time frame sometimes to get context of where the current market price is in relation to the longer-term trends. If we look here on the weekly time frame, you look all the way back to really the beginning of 2014, a couple of years now, where we've seen the market was in a significant downtrend, falling from all the way up here in towards the 1.4 thousand level, all the way down to the bottom into the 1.0400s. Then over the past year, and I'm talking about January 2015, that's this red box you see down here at the very bottom of the screen. That's important to note because for the past year, a little bit more than a year now, the market has been contained within that range. The resistance at the top of the range right around the 1.1400 level. And we can see that clearly by looking at it here on the weekly time frame. Now, as we get down to the smaller time frames, we'll go down to the daily time frame, and we can see the fact that it's hard to see that in long-term context, but there's that red box that's on the chart, and look where the black X's are. 1, 2, 3, 4, 5, 6 times we see these black X's along the 1.1400 level, where the market attempted to break above that 114 level, but couldn't, and turned around and went back down. There was one anomalous time where the market rallied above there, went all the way up into the 116s, and then turned right back around. But for the most part, the statistics and the probability tell us that as long as it's under 114, for the past year, there has been resistance. So that's what we've been studying in the live trade room. Opportunities to look for resistance and potential clues and evidence of reversal here for the euro dollar. And that's what we've seen over the past couple of weeks. Let's begin to zoom this in on the weekly time frame, and you can see, or the daily time frame, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Found resistance under 114, and now we've seen the beginning phases of a push lower. Now, over the past few days, we pushed underneath the last historical resistance, this orange shaded area. You see resistance here, resistance here. So these last two times over here, finding resistance, support on top of it. Now we're underneath that same zone of resistance again, the 112.90 to 113.25 zone, highlighted in orange here on this chart. So for me, historically, as long as it stays underneath there, there's potential resistance and the continuation of the reversal that has begun from the 114 level, as we've seen for the past year, into that level. So we're watching for further evidence of reversal, lower highs, lower lows, and patterns of price action that imply that reversal. So the break underneath, the open and close underneath, the rally back into it, gives me an opportunity to go short with a fairly low amount of risk. In this case, if we decide to go short from the orange shaded area, because historically and factually it's found resistance here before, we would place our stop loss somewhere above that orange shaded area, because we know that if it breaks above that orange shaded area, and I'm going to change that little line to red to represent a potential stop loss, but if we were to sell it, our risk is that it breaks above there and goes back up to our main resistance high into the 114 level. If it goes down as expected, then we have a couple of areas to look at. The 112, well, 112.25, 112 down into the mid 111s become our potential targets, and that's the yellow and the green shaded areas down here. And we can see that historical support on the left. So we know that as long as it's within and under the orange zone, historically it's had resistance. We've seen reversal from 114. And we have some potential targets down to the downside. Let's take a couple of Fibonacci levels, just one from the low that we see down here to the current resistance high. And interesting enough, taking that Fibonacci retracement measurement from that low at the spike low to the current resistance high, we find the 236 right in the middle of our orange shaded area, again giving us credence to that being a resistance. And then we see the 0.382 sitting at 112.20, right into that area, into the yellow shaded area. So we know Fibonacci is in the orange zone and this lower yellow shaded area, giving us a clue to resistance and a new target lower on any retracement. Let's take it down to the 4-hour time frame. As we get down to the smaller time frame, all it does is give us a little bit more detailed viewpoint to everything we just talked about. We know where the yellow zone is, the Fibonacci down there. We know the orange is the Fibonacci in there from the previous uptrend. We know we've seen reversal from the resistance high. One last Fibonacci from the highest high down to the most recent low that we've seen here on the chart, and the 382 Fibonacci retracement level of that high down to low is right at the top of the orange shaded area. So we know that that is resistance. There's potential to go down to the next area, the yellow shaded area. The break above the orange zone is the risk, and then it goes back up to the green zone if that's the case. So I have already taken a sell here for this currency pair at the 113.05 level, just inside our orange shaded area, looking for the market to pressure lower today for the euro dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.